We did see the NSE ending flat in yesterday's trading session, but we did have a number of companies reporting results. Let's start off with Kenya Commercial Bank posting a 48% increase in its first half pre-tax profit, really driven by its loan book. But the bank is still really concerned about loan defaults rising going forward. Your thoughts on the bank's results?
Well, I think their restructuring has really worked for them. They've brought down their cost-to-income ratio to about 56%, and that is a great thing. It means that is going well for them. A lot of their employees did take the early retirement package, and so Kenya Commercial Bank is becoming leaner and more efficient, and I believe that has reflected on the results. And I think that they have also increased their loan book substantially, and that's also an interesting thing considering that equity banks went down. And so I believe that going forward, they are set to actually, take bigger steps. It was actually very impressive to look at Kenya Commercial's numbers yesterday, and I believe that the banking sector is in a rebound, especially now that interest rates have started to come down, and they will see more interest in lending at the moment.
You're pretty optimistic about the banking sector. We know that the stock was suspended in yesterday's trading session ahead of those results. What kind of trade could we possibly see coming through from Kenya Commercial Bank in today's trading session?
Well, Kenya Commercial Bank has been going quite strong. The stock has been trading at highs. I think it's 23, 24, something like that. And the thing is, with Kenya Commercial Bank, it had already begun to show the expectations of investors before these, and we were already feeling that it was probably overpriced. But seeing the sort of results that they have brought out, I believe that there'll be high demand. There'll be a lot of investors coming in to take positions on that stock in the hope that going towards the end of the year, they will probably make a killing. And so I believe that the interest is going to be very strong. And seeing how they have come out and shown that their Kenyan business has been actually the most profitable and has driven the profits, and considering that they have a stronger regional presence, means that Kenya Commercial Bank is actually set for huge growth going forward.
Let's look at Equity Bank, also out with results yesterday, posting a 29% increase in pre-tax profit, really driven by interest income. We saw interest income rising by about 55%. Your thoughts on Equity Bank's results?
Well, Equity Bank has always had a very transaction-driven income model, and the fact that they're seeing interest income beginning to kick in is a good thing. But I think that they also have a more risky loan book than the other banks, and we did see a decline in the level of new loans being taken up from Equity. They also got hit by the fact that they're now paying interest rates at 30% corporate tax from what they were paying before, which was 20%, having been given a reprieve for listing a few years ago. And so I think that it's just a turning point for Equity. It's really more of a hiccup. And I think as interest rates begin to go down, then we're going to see a stronger uptake of loans. And I believe that Equity is also set for a rebound. I'm still very optimistic about the banking sector.
Optimistic about the banking sector. Let's look at Consolidated Bank. We know that they came out with a medium-term bond issue. They only were able to collect about 1.7% instead of 2 billion, 1.7 billion instead of 2 billion as they had hoped for. But it does look like there's a lot of appetite there in Kenya for bonds at this stage.
Well, the government also issued, I think, a 10-year note at the same time, and I think that pulled away a bit of the attention from the Consolidated Bank issue, and that's probably why they didn't raise the whole 2 billion. But I think that Consolidated, having gone from Tier 3 to Tier 2, and probably now looking towards expansion and growing into a Tier 1 bank going forward, is really an important thing. And the government has also come out and will pump in another 500 million. So I think it is a bank to watch for now, because I think that Consolidated Bank is looking to now go and start, playing in the big league. And I believe that once they actually get to the point of listing, which we have been hoping to happen for the last 2 or 3 years, that is once we get a privatization commission in place, then we are going to see Consolidated Bank coming to the market, and we'll probably see huge growth on that bank. And so I believe that Consolidated Bank is a bank to watch and is a place to be if it does come onto the market.
Let's move away from the banking sector, but we spoke a little earlier and you said Athi River Mining was one of the stocks that you have under your radar. We did have them coming out with results earlier in the week, and they have given a board seat to a Nigerian lender. Your thoughts on Athi River Mining and why are you so bullish on them?
Well, Athi River Mining has continued to grow by leaps and bounds. They have a diversified product offering, and I've actually always wondered why they don't actually come out and separate the different lines, the fertilizer and the cement, etc. And they have also managed to get a very good price to market of cement, and being very competitive on the market, especially with the influx of cement from the east, the Far East, and Asia. And so I think that Athi River Mining has continued to show that they have what it takes to actually dominate this market. They've grown from, I think, the smallest cement maker in Kenya in 2003 to probably the biggest in East Africa now, and I believe that they are going places.